A lot of buzz going into the weekend about GameStop and its impact upon the financial markets. Now, full disclosure, I don't have any GameStop stock, never even thought about it, and would not have even known they existed had this guerrilla-type trading war not broken out. So what are we to make of all this? Joining me now to explain, Dan Celia, President and CEO of Financial Issues Stewardship Ministries, nationally syndicated radio and TV host of Financial Issues on over 600 stations across the nation. Dan, welcome back to the program.
Thanks for having me, Tony. It's great to be here.
All right, Dan, tell me, what's all this about?
Well, it's a lot of trading from Robinhood, and what happened was that we've got a lot of retail, what they call retail traders, or on Wall Street they call them Robinhood traders, that have ganged up on this, ran it up, and are likely going to start retreating or maybe not. Apparently, they are turning their focus, the Reddit traders, moving their focus to silver right now, and silver jumped up 8% today. Some are saying Bitcoin might be the next. So the big problem was Robinhood. Robinhood did not have enough capital to cover the trades, and it was a huge problem. Now, they just raised, as of today, $2.4 billion for their brokerage app. So that's going to help them. Obviously, the $2.4 billion is going to help them. But you've got to have capitalization. Remember, you place a trade, Robinhood's got to purchase the stock. They got to have the capital to do that. Number one, in the interim, before your money clears, they've got to cover it. And if you're using margin is when you have, I'll just say, $10,000 worth of stock, you can borrow on margin at 4 or 5%. You can borrow 40% of that value. But when you go out on margin, you're borrowing that from the broker. Therefore, the broker has to have the capitalization, the cash, to be able to execute the trades. So what was happening, the real frenzy was Robinhood was unable to place a lot of those trades, and it really turned into a frenzy. It normally takes 3 days to settle a trade. They were going out 5 days, then they said 6 days. Now they're raising more money. They put trading stops. You can only buy 20 shares right now of this stock. So they will continue to try to put measures in to keep things at below a frenzy pace. But what is happening is a lot of these traders are going to likely move on to other platforms, a more traditional platform like a Charles Schwab or a Fidelity or one of those to do the trading so they can continue doing it.
Well, Dan, let's step back for a minute in the underlying issue here, and this is your area of expertise, but as I understand it, there was a focus on the hedge funds that were doing the short buying. And so explain to our listeners what, kind of the underlying issue, what's going on here.
So the hedge fund players buying and selling short means short period of time. They were doing that in big numbers. And there was a group that believed that, they were manipulating. They were manipulating the markets. And the average Joe didn't have a chance to get in on these trades. So they said, let's give them a taste of their own medicine, so to speak. And they pulled together through social media, and they decided to do something similar. As a matter of fact, as of Friday, some of the hedge funds lost up to 50% in the month of January because they were playing the other side of the trade. In other words, they were betting big that the stock was going to drop like a rock and they were going to make a lot of money, and it never did. And they lost $50 billion combined.
Is this something new that's emerging, kind of this populist pushback against Wall Street? And if so, what kind of impact is this going to have on the markets going forward? And should the average consumer who has maybe a 401k, is it going to affect them?
Well, if the market is affected, which it will be, yes, it'll affect everything. When the tide drops, all boats are going to go to a certain level, that's for sure. And so it would affect. The theory is that it's not going to last. That what the big players on Wall Street are hoping for is that they go away because the losses, they will take some of these retail investors that really don't know why they're doing it. There's no rational reason for it. They're going to take big losses. And some believe, it's a fad. More of them are going to lose than they are going to win, and they're going to stop doing it for fear of losing everything, or they're going to lose everything. I don't think that's going to happen, Tony. I think this is going to change the way trading is done for a long period of time, and Wall Street's going to have to accept the normal, everyday retail investor.
So what is still unknown in terms of what's happening with this, the ganging up on these hedge funds and all this, I call it guerrilla warfare. It appears very interesting to see what's happening. What are we still waiting to find out?
Well, I guess we're waiting to find out if the warfare, and guerrilla warfare is a good term for it, Tony, if it's going to continue, if they're going to have any kind of staying power. So, they're getting their financial advice from TikTok and Reddit and, not a very good source of financial news. That is a problem, and these social media platforms are going to continue to drive the populace that follows them. The problem is there's no rhyme or reason, and it's not going to end well. There's no logical reason. So I think that the hope is that it doesn't end well sooner rather than later, and it stops. But, the question will be for me, will somebody come in, some radical groups, totally unrelated to the markets, will they step in and begin to fund something like this and support it? And that could be an issue and a problem. I've not mentioned that because I don't want to give anybody any ideas, but that certainly is in the back of the minds of Wall Streeters as much as they don't want to admit it.
So that would have a destabilizing effect upon the markets.
Well, yeah, it would, and it would change the way markets do business, and that's the biggest problem because the big guys on Wall Street can't really bear to see the change. It would directly impact them in their pocketbook and in their business, and that would be a huge problem for them.
Which it goes back to what you said, there's no logical reason for this because people engage in the stock market. Everybody can basically figure out why somebody is in there. It's to make a gain. But in this case, that element is missing. There's another factor that's driving their behavior.
Yeah, that's exactly right. And, they don't have the wherewithal. It's hard to convince them, hey, there's no logic. Well, that's fine. I have a friend of mine on Wall Street whose son made $50,000 and went out and bought a house, put it down on a house. It's hard to convince them that there's no logic when they're day trading on something that is not even worthy of the stock. I mean, there was so much stock out on the street that it was diluting the shares dramatically. And by all accounts, it should have been tanking. but still managed to go up. So the idea and the argument that there's no logic probably won't hold any water for these guys.
Well, speaking of not having logic, let's talk about the economic policies of the Biden administration and the impact that's going to have overall on the economy.
Yeah, I think it's starting to get a little bit scary already very quickly. I believe that, Tony, I did my thesis on one of my master's degrees on the economics of Mussolini. That was many years ago. But, things happen very fast when there's change like this. And I predicted that it would happen very, very fast. And it is happening faster than I thought it would. So, excuse me, we had a good day today because Biden didn't do too much harm. But my fear right now is if the Republicans continue to push for a smaller COVID relief bill, and demand it be funded, then I think what I anticipated, new tax bills and higher taxes coming in November, will be expedited dramatically. And that'll really set things in a tailspin.
Yeah, just what they've done in the first week in the cancellation of the Keystone Pipeline, canceling these leases on oil and gas. I mean, the oil and gas industry, the energy industry has been creating, thousands of jobs in the United States. It's a national security issue. We're energy independent. All of that changes overnight.
It changes overnight, and the problem is, Tony, it can't. It can't. It has, but it can't. Because you can want all the battery-operated cars in the world as bad as you want them, but it is not going to happen unless it's on the back of fossil fuel.
Right.
And they haven't figured that out yet. So that's a problem for the economy for sure.
Yeah, we'll be like a third world country where we'll be riding bicycles.
Exactly.
Even though I like to ride a bicycle, but not to work. Dan, Celia, great to have you with you. Great to have you with us on the
Tony,
program.
Thank you, Tony.